Welcome back, fellow traders. Sive is here with the forexpeacearmy.com, and today we take a look at the euro currency as usual with our daily updates. Yesterday it was a lot of mess around the Jerome Powell firing, so we'll try to understand what has happened, why actually this volatility has happened, and what does it mean to the markets. And second, we will try to just find some reasons in the mess that has happened yesterday in euro currency, find some reasons for position taking, trying to create the trading plan. That's two objects that we will do in this video. So first, concerning the Jerome Powell resigning, so Donald Trump already said that he hasn't said that, so that he doesn't intend to fire the Jerome Powell until end of his term. And you can see that reaction was as follows. So on the numbers that have appeared first, market jumps. Why? It actually tells that firing of the Jerome Powell means that potentially interest rate policy will become more dovish, and that has supported the market. The gold market has jumped even more, just because it's also risk factor and lack of confidence in the United States financial system. If you're just president can fire the chief of the head of the central bank. Once everything has returned back, it's obviously just means that everything turns back on the way of the hawkish policy based on the recent CPI numbers that we talked yesterday, and means that in July we haven't got any possible rate cut, so everything returns back. So based on the mess that we've got, it's very difficult to identify the correct way how better to deal with this situation. Because in general, as we said previously, overall action, even with this recent volatility, stands really gradual. It indicates that probably this is retracement. Here, market is forming double harmonic swing. So you can see that the retracement now is doubled, but it's still coming to the support area that we talked about, around 1550 area, it's daily average sold. And chances on upward action still exist. So, because actually the market hasn't dropped too much under the support area that we discussed yesterday. So support stands around 1590-95, market now 1582, so mostly in the same area. You could see that today's session is in fact the inside one to the previous. So mostly the situation barely has changed. The problem is with the identification, the proper patterns to watch for. So on the fall time frame chart, here's what we have. First of all, market has completed this double harmonic swing. We have the OP target. Based on the Jerome Powell volatility, we've got huge, this kind of the high wave pattern. And usually this pattern might be very useful because the direction will be set depending on the breakout. So if market will break it down, hence deeper retracement might happen and will start. If somehow market will stand inside of this range, start moving higher back to the top, that means that market is preparing for reversal. And in general, if even without any high wave patterns, if it will return back to the area around 1750, 118, so that we talked about previously, it's already by itself will be bullish sign and signs on the possible upward action. So this reaction, by the way, you could treat as a reaction on the Gartler's triple to buy, because OP has been reached here, and it's actually a 30% retracement. So now the nuances stands and answer on this riddle stands in the details. And here we even will not take a look at the hourly chart, because on the hourly chart we see nothing. But instead, if you take a look at the 15-minute chart, you will see some details. So on the 15-minute chart, you could see what we have. First of all, on the top, we have huge evening star pattern. This pattern usually takes the shape kind of the ABCD pattern to the downside, which means that by this pattern, market has to take out of these lows. It not necessarily will be straightforward downward continuation, but at least it could take out of these lows. Correspondingly, this makes me think about this possible butterfly that might be formed somewhere around 1518 area near the daily average sold. In particular, this pattern might be used for considering taking long position, or if you prefer to act more careful, more gentle, and you could wait when the market will start upward action, maybe some hand shorts will be formed based on this butterfly or something like this. This is in two words what the plan we have. This is a bit conservative because we prefer to wait for this possible downside spike. Alternatively, you could try to take the long position if you would like to against these lows, risk a bit more, and market could drop here. But if market will stand inside of this range and start upper direction, well, you will get some position already. Why this also possible? Although personally, I'm gravitating more to the first scenario. But in general, if you take a look first on Great British Pound, you could see the market stands around the neckline. And potentially it's also might start preparing for a possible reaction to start forming right arm. So on euro currency, by the following this idea, might stand inside of this range and start upward action right from this range without any downside action. The same situation approximately stands on the gold market. Yes, gold market is a bit different stuff, but here's also the same. The gold market has greater upward action and smaller retracement. So there are chances that market will remain in this range higher. But euro is a bit different. If you're not sure, but you would like to take the long position, you could split the position in parts. Maybe take the 20% of your position here and market drop, take more. Or following just the first scenario. Waiting for a drop, waiting for completing of the patterns. This is actually perfect scenario. It's best scenario in this case, because you will act only when the pattern will be in place. So, and I gravitate to this scenario, but I'm just show you all possible ways how you could act around this difficult situation. Maybe this will give you some ideas for your own trading plan. So that's all for now. See you next time, and let's see what will happen.